Welcome back to another episode of Paladin Financial Talk. I'm Nikki Foley, your host, and I'm with my co-host here, the Tony Shore over there with the thumbs up. So
Thumbs
fantastic.
up.
The Tony Shore is how I introduced you there.
Uh-huh.
So how
Yeah,
about that?
the Tony Shore, the infamous, right?
There you go. Tony, I haven't been with you for like maybe 4 weeks or so. So it feels
At
good
least,
to be
yeah.
back here.
Yeah, it's great. Yeah, great shows with Jeff Quick and everybody down there.
Yeah, we've
Really,
been on a rotation. And so this month we've been focusing on
yeah,
life insurance.
right.
And it has been, I think May 10th was Life Insurance Awareness Day or something of that nature, which lent to the theme that we've been going through. And we started with an overview at the beginning of the month. And then Ellie went through what if you're retiring young
Right.
before that 59 and a half mark? What could you do to pull assets before you start, being penalized potentially? And life insurance is an option for that. Today, we're going to focus a little bit on the long-term care planning perspective and how you might use life insurance for that. And then we'll round out the end of the month here. You're going to hear from Jeff Quick, and he's going to focus a little bit more on the estate planning side of
Sure.
things and charitable giving, again, using life insurance. And then finally, we'll have Jeff Foley, and he's going to have a guest with him. He is going to have Mr. Phil Vogel, who is
Phil Vogel, yeah.
an industry veteran
Yeah.
and really knows life insurance. And he's going to focus a little bit more on maybe the niche, if you want to say it, or the specialization you can do with some life insurance. And
Sure.
so premium financing, and even for business owners, buy-sell agreements and so forth. So we have a whole month chock full of life insurance.
That's awesome. Well, Jeff Foley was on recently, and he hadn't been on in a while. So I was excited. Ellie and Jeff Quick always do a great job, and they've been talking about life insurance. But this life insurance really hits close to home for me. What we're
absolutely.
talking about today, long-term care.
And it's one that I am passionate about. I think it comes from experience when you start to find the place that you really feel like you want to spend your time, and the long-term care planning and making sure there's an intersection of your wealth and your health. It's a part that I really like. And I know you have been going through a lot personally with your mom and dad. And so you probably have a lot to contribute to the stories that might go along with what we're going to talk about today. I'm kind of a dork over here. I'm itching to go. If you're good with this, if we just dive in.
Let's dig right in, because this is an important topic. And I think it's important to people who, especially people like myself, who have loved ones or parents, their parents are going through it. If you've been through it with your parents, then you realize, hey, I need to get something straight. Sarah and I realize we want to make sure we don't have this situation. And so unfortunately, a lot of people don't think about it or don't think it's going to be an issue until they have to go through it with somebody. And I'm going through it with both of my mom and dad right now. So.
And I think you make a good point. I know some of the things that are going on in your life, there is a financial aspect, but there's also a time aspect. You had to drive down this week
Yes,
and,
I did.
Be present to make sure you got
Yes.
something in place, and, crossing your fingers as you went through the process as well. And so there's a lot of elements that go along with this. And I think people fail to plan for the long-term care, long-term health. And I'm not talking about long-term care insurance when I say long-term care planning, health planning, but there's also a time element and the impact that it has on family members. And so not leaving things to be unplanned is really the spirit of what I think the conversation is today. And so
yeah, I would agree, Nikki, and I can't wait to dig into this. So where do we start? What does life insurance have to do with long-term care?
Yep. Well, I'm going to back up for just a second about something you said, and you talked about your parents needing it, but also the impact it has on you. So for our listeners, some people might be thinking, well, this episode doesn't apply to me. And I want to point out that it does apply to so many people because of parents, because of who you might be. But also, if you think about how am I going to fund this, really it starts early in the financial planning process. And imagine if you could use your HSA to be putting dollars into it that could eventually be used for long-term care planning. So it really starts as early as you want it to, I guess is the way to say it.
Okay.
So, just pointing that out for our
good.
listeners. Yeah. So just a couple things that I want to make as an overarching kind of theme to this is I am a big believer that, well, one, healthcare costs are a big part of somebody's spending throughout their lives, but I believe that they should be part of your financial plan. And I don't think people typically see that intersection or plan for that of what role will health insurance or health care play in my overall financial strategy. But I think it's something that both we are going to hear more about as boomers continue to be in a position where they're taking care of parents, they're planning for themselves, they have kids. But I think we're going to hear a lot more about this from the industry as a whole, that there's this intersection of health and wealth, and long-term care planning goes along with it. And so,
Yeah, good point. There's over 11,200 people turning 65 each day for at least the next 4 years.
yeah.
So that many people are reaching retirement age every day, over 11,200 people a day. Isn't that crazy?
And we go back to something that you and I have talked about before on a previous episode, that most of these individuals have been on group health coverage where their employer has just, you kind of set it and forget it is the mentality. And
Right.
so having and bringing attention to the healthcare side of things is tremendous.
Yeah.
And I don't know if you saw the statistic, Tony, and you've probably heard a bunch of these in what you're going through, that a couple who retires at 65 can expect to spend 300,000 on their health care and medical expenses in their retirement timeframe. And so 300,000 is a couple, so 150 per person. Are you prepared for that? And I honestly think that that might be just a little bit low. I don't know if you have an opinion and what you've been through, but could be low even with that.
Yeah, it's a lot of money, and people think, well, out of pocket, I'm going to spend that much, but really they are.
Yeah.
Yeah.
And so getting because of where our population is, I think
Yeah.
it's a topic. Because that this is an uncomfortable area for a lot of people, I think there's a need for partners, financial services, just any type of resources to
Yeah.
educate and help people as they move through this next phase of life in the role of healthcare
Yeah.
as it integrates into the financial strategy part of things. I heard something the other day that we never talk about this, but if you're still in the workforce and you know that you're working towards and want to be proactive on the long-term care planning side of things, there's a couple things that are resources and things that you could do right now
Okay.
is figuring out how to fund something while you're working and while you have income coming in is, I think, important to point out. But there's also, I don't know if people have heard of EAP. It's employee assistance as part of medical insurance. Those type of programs are available at no cost to employees, and they usually can help find facilities for parents. They can help you plan for some of this and get an idea of what costs are going to be if you're not comfortable maybe approaching a financial services professional yet. And so there's lots of resources when you start like thinking about what do I need to do to get prepared and what would this look like to help pay for some of these health costs along the way.
Yeah, how are we going to cover that 300,000, right? That's the key. And I know you work hard with your clients to incorporate that in their overall financial plans for retirement.
Yeah, and I think you make a good point there. So let's talk about how we would cover that 300,000 and how
Right.
you go about doing that and how does it intersect with that financial plan.
Sure.
I think to start with, think about how much you actually have is a starting point. And a lot of people that we meet with have been doing it themselves along the way. They haven't felt the need to meet with a financial planner until they get to that retirement phase.
Right.
At that point, they want to know what their income plan is going to look like, right? They want to know if they're actually going to have enough to
Right.
make it to the end. And so getting an idea of what their income plan will be and if they do have enough assets just to start with to live for the next 10, 20, 30 years or whatever it might look like. So I think that's a starting point. And that's something that we do with all of our clients and prospective clients. We show them what that would look like and do they have enough assets. So point number one is let's just see if we have enough money to retire.
Right.
I think the next point that comes along with that is what role is Social Security going to play in all of this? And do we think that I'll even get Social Security by the time I retire? Because that's, again, taking a look at and making sure we know what our assets are going to be when we retire and we start looking at expenses that might go along with health insurance.
Yeah, that's a big part. That's the foundation of any retirement income plan is Social Security because it's a known factor typically.
Yeah, people want to know how they are going to optimize that and
Right.
when should I take it and when can I make sure that I get the most out of that. I think from there, Tony, it is how much then. So I figured out what all my income is. I figured out what all my assets are, but then what are my expenses going to look like in retirement? And I think a lot of people say, oh, my expenses are going to go down. I don't have to drive to the city. I don't have to pay for parking. I don't. I think reality probably is it doesn't really fall off as much as people think that it might fall off. They find interests that, cost money to do along the way, or they travel, or they end up maintaining the lifestyle they had when they were receiving a paycheck from an employer.
Sure.
And so
Yeah.
figuring out what expenses do look like, and the thing that happens there is they look at it just like they are going to continue their life, but they don't start incorporating the pieces of the what if I have a major health situation and I do have to be in a facility and I do have to plan for something like that. It doesn't get incorporated into most of the conversations. And that's what, like I said before, I think we're coming back to this.
Well, yeah, and I think too. I mean, people always think they're going to spend less in retirement, Nikki, but I don't think that's true. I think nobody wants to take a pay cut in retirement. So, in our activity, let's assume here that expenses aren't going to go down in retirement, and we know healthcare costs are going to go up too.
I would agree.
So
with
you got to
that.
plan for them.
Yeah, and you have to plan for health costs going up on the Medicare side of things.
Yeah.
Like your Part B goes up every year, and then if you are on a supplement or you are on a Medicare Advantage, those just incrementally go up, just like group insurance. But I think what is important to think about is people in general think that they are going to receive care at home, and oftentimes they say that their family members are going to pay for it, or not pay for it, but provide that care.
Yeah.
And so is that really realistic? And making sure that that you have those conversations and you're aware of what you want that to look like, but you're not just keeping that to yourself, that you're having those conversations with your family as well. So let's go through some of the things that are out there and some of the statistics.
Sure.
And I know they're just statistics, but I think it's worthwhile to get a feel for what the average individual may be facing. So first of all,
it gives us perspective is what these do.
Yep, exactly. So 20% of people will require care for 5 years or longer. And 80% long-term care, 80% of long-term care is provided by family members. So are your family members prepared for that? And do you want to, instead of leaving it to be unplanned, what can you do for the planning portion of it? And how can you have as much control as possible over what your situation looks like? For most people, there's a lack of communication that goes along with this, and they have had, fewer than half of American adults have seriously discussed long-term care plans with their loved ones. Yeah. It's kind of startling when you think about it.
Nobody wants to think about it, right? And we put it off.
Yeah.
Yeah.
Despite anxiety, most said that they haven't saved money or even researched their options for long-term care. Yeah. And then the cost of care. Some families said that they were shocked by the high cost of nursing homes and aides when considering their options. And this is probably the thing that we hear the most when we're, meeting with people from a financial perspective and they're caring for parents. They are startled by the fact that it is $11,000 or $12,000 or $8,000 a month for the type of care that they're getting for their mother or their father, and they say they have to go over and still do so much to be feeling like their parents are getting the care that they want. And those are big numbers, and they're still shocked by, how much this is going to cost. So most people, I'm going to give a few more statistics here, Tony, and then we'll keep going. But many people become responsible for their parents' health care management and cost over time. So there's approximately 40 million caregivers in the U.S. currently, and adult children providing care for their elderly parents is like 66%.
Wow.
Yeah.
Yeah.
And those that are providing financial assistance for their elderly parents is 55%. So if you think that this isn't something that's going to impact you, there's enough numbers out here saying there's a good chance that it might impact you in some way.
Yeah. Well, it's impacting me with my parents. That's for sure. I mean, it's the least I can do is to help them because, they put up with me for years, Nikki, which couldn't have been easy.
Putting
right?
up with you sounds so negative, Tony.
Couldn't have been easy. And I love my parents, but it is a lot of work. Even when they're getting outside care, I'm still, have to drive down there every other weekend to.
Would you be willing to share, what does the drive look like? What's the situation with your mom and your dad? And just overall, as a
Sure.
child of two individuals
Yeah.
who are getting care, what does that look like?
Well, first of all, I'm an only child, so I
Yeah.
have no brothers and sisters to help out, which, I've never minded being an only child until now. Now I really wish I had that big sister,
Yeah,
right?
there you go.
But I drive 3.5 to it's about a 4-hour drive. If you make one stop, it's about 4 hours down one way and back. And I'm doing that about every other week. And my dad insisted on staying at the farm. My mom has been in long-term care with her Parkinson's as it gets worse for about 2.5, 3 years now. And so my dad has just gone down, and she's getting great care, and she's in a facility, and that's good. But my dad has been going downhill and did not want to move. Well, recently this week, I had to take urgent time off because out of the 70-person waiting list to get into the assisted living in an apartment in the same facility that's connected to where my mom is at, there's a 70-person waiting list. And so, but since my mom is already there and my dad, they know my dad because he comes in and they know our family, they bumped him up the list and he got the opening. So they called and said, we got an opening, but we need you to come and look at it right away.
Yeah.
Otherwise, we have to, move on it. We have people waiting. So I drove down there and my dad's excited. He's
Good.
ready to move. He's packing up. So that's good. But I have to go down there every other weekend to look at their bills, help them with that, fill out paperwork for her. Her cost is $11,000 a month.
Yeah.
But she needs full care, everything. That's the full Monty because she's starting to have memory issues. So with her Parkinson's. So she needs 24/7 care and she needs the full Monty. And it started out when she went in, it was about $6,000 a month. And now it's $11,000 a month. And so the state helps out with part of their cost for that, but she has $2,000 worth of insurance for her toward her long-term care that was actually a rider on their life insurance.
Okay. You're leading us right down the path of where I want to go with some of this, Tony. And so I think you, looking at your story from our listeners' perspective, you can start pinpointing where it takes either time or money to make this caregiving situation. And it's just temporary, at least was temporary with your dad as you tried to figure it out. And imagine if he had to be in that 70-person waiting list. I mean, there's so many, like, that causes anxiety for me just across the table here.
Yeah, it
of
had
what
been.
that would have looked like for you and your family.
Yeah, it was. It created a lot of anxiety up until last Friday when I got the call, saying, hey, we have an apartment. This could work out for your dad. We're willing to move him to the top of the list because your mom is here.
Yeah.
We don't have anyone else on the list with a spouse already here.
So I think we've certainly made the point of, are you planning to leave this responsibility to your children or your loved ones? And if you are, recognizing what that might look like and having communication is the foundation a lot of this.
Cost and time.
And don't let it be unexpected from a planning perspective, a time perspective, or a cost perspective. So what do we do about that? Well, most people are going to be in some type of facility, or they're going to choose to stay at home, and they call it aging in place. But they're still, and that's like 76% of Americans want to have care in home, just like your dad. There's still expenses that go along with that, whether they have to do something to the home so that you can actually stay there, or having the health aides come in and the type of support that you need. So you already gave the highlights here. It's $11,000 a month for your mom's care, and that's pretty standard across the way. So assisted living, you could say on average is $66,000. This is in Minnesota a year. You bump it up to nursing home and it's close to $160,000 annually. And so when you look at that number of somebody just needing $150,000 in retirement for health insurance or for health costs, I think that that's not necessarily realistic for everybody. So plan with the worst in mind is the way that I look at it.
Yeah, that's not realistic for most people, I would say.
Yeah. And I think it's important to point out that Medicare, most of the time people think Medicare and they don't really know what the scope of that means, and they don't know if it's going to cover any of their long-term care coverage, along the way. And I'm here to share that Medicare does not cover long-term care expenses. And that's a very misunderstood and confusing part of Medicare. So Medicare deals with medical expenses like doctor's visits and hospitals, but it does not deal with like those non-medical things like activities of daily living, which is your bathing and your dressing. And that's not what you want your kids doing with you anyway, if I think most people would say that. And so that's not getting covered by Medicare. So how do you fund all of this? Most people that we work with, if they don't have an experience like you're going through, Tony, they say self-funding is the very first thing that they're going to do. Legacy isn't as important to them to pass on to their kids, and so they are fine with using at least some of those funds to make sure that they can pay for care.
Sure.
So that's an option. I think things to think about, though, is if you have to take money out of whatever account that it's coming from, whether it's savings or investments, how is that going to be taxed? And so a dollar to pay for $11,000 of care isn't really $11,000 if you have to pay taxes on that coming out of your accounts. And so you have to bump that up to whatever your tax rates are. And so knowing that a dollar is not necessarily a dollar is a really important planning piece to this when you're talking about self-funding. There's the option of insurance, is what you mentioned. And you said that you had a rider on a life insurance policy. So that brings us full circle to where we're at today, that life insurance can be a great way to fund for long-term care planning. But most people do not think of life insurance for that reason. They think of it for the death benefit.
Yeah, the death benefit.
But life insurance, again, can be a great tool for this. And I think it's important to talk about what that could look like. So life insurance, other insurances that might be out there, people talk about long-term care insurance. They talk about annuities with an LTC, a long-term care rider on them. Long-term care insurance, a lot of the carriers that used to issue it are no longer in the game.
Right.
Or they are, there's, I think if I remember right, there's like only 12 carriers now that actually issue new policies. And if you have your policy through a carrier, they may not be issuing new ones. And so it's a very limited. And that's because people don't like to pay in and then not know if they're ever going to use that. So in the new world of where we're at with insurance, life insurance is a really realistic tool to use to help pay for this type of care. So let's talk about what that might look like. Typically, you can do either a hybrid life insurance policy, or you can use, it's basically a cash value life insurance policy that you can use your bucket of cash to pay for long-term care expenses. And typically in these policies, that money that is coming out to pay for the care is income tax free. And that's a really key piece, that if you're self-funding it, it's not income tax free. And so it's important to look at, where does life insurance play into it? What kind of policy are we talking about? It's a cash value policy that we're talking about. And then there's different ways to do it. It could be like an index universal life policy where you use a bucket of your money towards your long-term care. Or there's policies out there that are known as hybrid life insurance policies that have really are focused on long-term care insurance and being able to use it specifically for that. And if you don't, then you have an option to have a death benefit. Yeah.
So basically with that one is you're using if you need long-term care, you'll use it. You use the death benefit for the long-term care. You use it while you're still alive to take care of the long-term care, but it decreases the death benefit. Or if you don't end up using it, it becomes the death benefit.
You got it. Yeah. So it's a really flexible policy that provides you some peace of mind. At least some of your care is being covered along the way because of this death benefit.
Yeah, I believe
that
that latter one is the one my mom has, is where there's actually the death benefit is decreasing because of that.
Yeah. And benefits that go along with this is clearly some of the things we've already talked about, but oftentimes that cash value is linked to the market. So, and you're actually earning something along the way. It's not just sitting there. And so there's a variety of things that are really benefits. And so this is one I would highly recommend at least exploring. And so you hear life insurance, don't turn and run the other way. be open-minded about the role that it could play in long-term care planning.
Sure.
There's something called linked benefit insurance policies. There's long-term care riders on life insurance. Most people have heard of chronic or critical illness riders, and so it's worth exploring these and understanding how they might play into things.
Yeah, and they've made a lot of improvements to these policies over the years. It used to be for long-term care, you just had to buy a long-term care policy, and those were outrageously expensive.
Yeah.
And now the insurance companies don't even want to offer them. And so that's tough, because if you don't end up needing it, you lose all those high premiums you've been paying in. Whereas a cash value, you put cash in, it grows, or the hybrid, you're utilizing the death benefit. So I think those are much better than the older type policies.
Yeah. So if we can partner with our clients and our prospective clients to understand that once they reach age 65, what is the role of Medicare going to be? How can I get a policy that is right for me today, but also for my future state?
Sure.
And then what does it look like when I get into a situation where I might need an elevated level of care? And how am I going to pay for that? That is a huge part of your financial strategy along the way. Other things to think about that I'm getting away from the life insurance talk now, knowing that that's a great option, but there might be others. What if you're somebody that maybe wouldn't qualify for life insurance? Because that's the reality on all of this, is you have to qualify for it. And so what if you don't? Well, an annuity is another insurance product that would be available that oftentimes have a long-term care rider on it. And it doesn't have necessarily some of the tax benefits when you're passing assets, but it has a variety of benefits that help you right here and today with the long-term care expenses that you have along the way.
Yeah.
Another one that people are not thinking of very often as it relates to the future state is as a health savings account.
HSA,
You got
we
it.
mentioned that earlier. Yeah.
So an HSA is, you really have to be disciplined to when people choose to get into a high deductible health plan, they often do it because they want a lower premium, and they're not thinking about taking any excess money that they have and throwing it into the HSA account that goes along with it. These are, you're putting, pre-tax dollars in, it's coming out for health insurance expenses. It can come out tax-free, income tax-free. So what happens though, rather than spending it as you go, if you can let that build up and then use it for expenses in your later years, like long-term care planning, you are having tax dollars come out, again, income tax-free, and that is a huge benefit. So HSA's misconceptions is, I don't have the money to put into one in the first place, or I am going to use it as I go. But if you can be disciplined and put the money in and then not use it and save it, that is the golden ticket for planning for long-term care.
It's really the only account in the IRS tax code that allows you to put it in tax-free. So you get the tax benefit up front. It doesn't count as taxable income. So it's removed from your taxable income. So it's going to help lower your taxes now. Plus, it grows tax-free inside that account, that HSA account, and it comes out tax-free. It's really the only account that allows you to put it in and take it out tax-free. And so that's huge. And the fact that it doesn't, you don't lose it each year like you do with the
FSA side of things. So
That's
it is
amazing.
a tremendous vehicle that people, I believe, are overlooking, and I really want to bring this awareness to individuals if they're not taking advantage of it. There's a lot of other things that we could talk about, but I think we've hit on the highlights of it could impact you. It could impact your family. Don't leave this unplanned or unexpected for you or your family members. Look at what your income is going to be and then start planning from there of what your expenses might be. And if you are going to self-fund, know the pros and cons of that. And if you want to look for an option that could really benefit you from a tax perspective, life insurance, don't turn and run the other way. It might be a really valuable option for you and your family. I think other ones to look at is an annuity might be appropriate for some people. There's the options of doing something with an HSA account if they still have eligibility to be in one, if they're not retired, or if you are using traditional health insurance and maybe are considering a high deductible. There's a lot of benefits. There's other things out there like reverse mortgages. We could go on and on with the planning perspective, but I think the key is partner with somebody so that you have an expert in your corner who has knowledge on this. And then you weigh all the pros and cons and come in open-minded about what this might look like, because pretty good chance it's not going to be 150,000 or 300,000 as a couple, but 150 as an individual.
Sure.
Certainly could be more than that.
Well, yeah. Well, Nikki, great show today. I'll let you close us out and give our listeners the information they need to contact you, because all this to say you should work with a financial professional to help get a plan in place to help cover these costs.
Yeah, absolutely. And Tony, thanks for being willing to share a little bit about your family along the way as we talk here. And we'll call that a wrap. So thank you again. Nikki Foley with the Paladin Financial team. If you'd like to reach me or anyone on our team, you can reach us at 651-842-8406. Also reach us at paladinfinancial.com and follow along on Instagram and Facebook and all the social media outlets as we talk about these things and more. And look for new episodes each week as we wrap up life insurance and on to the next this summer. So thanks so much, Tony. We appreciate all you do for us.
Yeah. Thanks, Nikki.